Good morning, ladies and gentlemen, and welcome to the show. Listen, glad to have you guys here. Today is October 3rd, 2019. Let's talk about the straw that broke the camel's back. And, what we have is we have a economy that's starting to roll over worldwide, not just here. Manufacturing numbers are off. We've got countries that are slipping rather quickly into recession. There's not that much good news out there in the economic system right now, and the Fed is behind the curve. And what I mean by behind the curve is they are actually reacting to the economy rather than stepping in front of it, and they're behind it. In other words, they wait until the market rolls over before they react to the market rolling over, instead of getting in there ahead of time and supporting the markets. So they're behind the curve. They're way behind the curve. I must say that the president told them to get ahead of it, to slow it down. It would be similar to a guy having his car in the front yard and people see it starting to roll backwards when the handbrake's not on. And he does nothing, but he waits until the car gets moving too fast, and then he tries to jump in. It's too late. That's the way with the economy right now. But what is the straw that broke the camel's back? Let's get the charts open right here and take a look at what I think is going to be the straw that breaks the camel's back. Brexit. One word, Brexit. Boris Johnson's been trying to get a new deal, trying to push through a new deal, and now he's presented his new deal to the members of Parliament. He submitted it, and they're looking it over and everything. They're very skeptical. The European Union is very skeptical right now. Let me read just a little bit of this. It says, Boris Johnson is setting out his proposal for a Brexit deal in Parliament, while EU leaders also consider their response. And from what I've heard, basically this is just a rehash of the old deals that didn't pass. But still, they're getting desperate now because the clock's ticking down day by day by day toward the 31st of October. If they don't come to some sort of a deal or arrangement by the 31st of October, they're going to fall out with no deal. Now, they've put a law in place where Boris Johnson, by law, has to ask for an extension. But the people, they know what they voted for. And they didn't vote for extension after extension after extension after extension. Boris Johnson has already said he ain't going to do that. We'll have to wait and see, because by law, from what I understand, he has to do that. So I mean, this could get really, really hairy or really tricky by the end of this month. And I mean, this is not long away. It's only a few weeks away. And and this is the default position on all of this, and the 31st, unless something is done, they're going to fall out of the European Union with no deal. If that happens, and that's the default position at this point, actually it's the most likely scenario because it is the default position, and you know how slow government is at working at stuff, trying to get stuff done. If that happens, it'll be the straw that broke the camel's back for the world economy. Quite seriously, folks. So I'm watching this very carefully in the developments, and it looks to me like the European Union is going to really take a serious hard look at this deal. But I don't think they're going to give it the go-ahead because of what's happening, I guess, in Ireland. I think it's what they call the Irish backstop or whatever. There's a lot of problems there. I was reading down here. It says the EU has a number of concerns when it comes to the Prime Minister's offer. Concerns, using the word concerns. And the European Commission says before it can think of compromise, it has a number of detailed questions for the government when it has properly digested the paper. In other words, they're going to take days to look the paper over, and then they're going to come back and they're going to have detailed questions. That doesn't mean that they're going to approve it. That just means that they got questions. It says the EU fears the Prime Minister's offer could pose a threat to the Northern Ireland peace process and leave the single market exposed after Brexit. These are two big no-nos for the EU. And so it doesn't look good for his deal, but the days are counting down while they hash all this over, and in the end, if they turn the deal down, which I think is probably what's going to happen, I'm not sure, but probably, they're going to fall out on the 31st of the European Union, and this will break the economy worldwide. This will be a shock, an enormous shock to break the economy. Now, what's next is if the economy really starts to roll over big, watch Deutsche Bank. Watch them roll over. Watch them roll over as a secondary effect of the entire world economy going into recession. Watch Deutsche Bank go down. And then we'll be in a world of pain. Let's take a look now at the silver price today. $17.52 bid, $17.62 ask. It's on the high side of its range right now. The new range it established for itself is at $17.20. So silver's doing good. It's doing very good. Gold, $1,500 basically. A little bit above $1,500, like $1,501. Gold is doing good too, and they're maintaining. They're staying up there. They're not falling off or anything. You know, I think we're getting ready for one heck of a big rally in gold and silver. I think that's what's next. What's next? Next, gold and silver rally. I think that's what's coming. I think crypto is going to rally, but I think it's going to take a little bit longer down the road. Today with cryptocurrency, we're looking at $220 billion market cap for the whole industry. That's all the coins. Bitcoin dominance is 67%, so that means Bitcoin takes 67% of that market cap is in Bitcoin. It means Bitcoin, by far, holds the most money of all of these coins. And I think this is going to continue, this trend of Bitcoin being a dominant coin. We see all the coins basically going along sideways today, so there's not a lot to look at with cryptocurrency today. We're going to move on to the Dow now. And what we're looking at is 26,052. It's down 26 points on the day after a big fall yesterday. And today the Dow, well, okay, it's down 11 points. It's been almost staying level with the board today, but it's like a drunken sailor. Honest to goodness, the Dow, it doesn't know which way to turn right now at this point. It's waiting for more stimulus and more measures from the Fed, and at the same time, it sees the economy of the world turning down, you know, so it's got pressures on it to go up because they're very hopeful for more good news from the Fed, more stimulus, and Dow knows that the worse the economy gets, the more likelihood they're going to get stimulus. And it's just this whole thing where it's where bad news becomes good news now for the markets, for the stock markets. Bad news becomes good news. And this is a strange situation. But they know that the worse the news gets, the more stimulus they're going to get. So they're just basically become a parasitic organism feeding on stimulus. That's basically what it's become. It's not real markets anymore. It's just a parasitic organism. A parasite. A parasite feeding off of... Anyway, this is serious though right here, folks. Well, I got to show you right here, serious. A markedly large drop-off in the oil price. It's getting down to almost heading toward the $40 mark. 51.80 today, and it's down 79 cents. That's a big drop. That's 1.5% in one day, and we've had declining oil prices. If we look at the 5-day chart here, we can just see it drop and drop and drop and drop and drop. You know, I mean, this is serious. This is serious. Let's take a look at U.S. Treasuries now. And this is serious too. We're seeing declining yields all the way across the board. And this is just showing us how much money is nervous right now. The biggest place they've been running all this time, they're scared. Investors are scared. They know the economy and everything's starting to turn over and everything else. And they're looking at this as the ultimate safe haven asset. Can you imagine the ultimate safe haven asset? If it was a company, the United States was a company, you know, and you looked at the amount of debt that they have, you'd say, well, they're bankrupt. So they're seeing a bankrupt entity as the world's best safe haven asset. None of it makes any sense. But you know what? Everything's going to start to make perfect sense. This crash is going to correct everything, you know, and things will start to make sense again after this crash is over, I think. It's going to clear out the system so that all this craziness that's going on now, I mean, it's just nothing is right or correct anymore. Everything's topsy-turvy, upside down. Like, you have to see this upside down world when you look at the stock market actually goes up on bad news now. I mean, it's something's wrong here. Houston, we have a problem. Let's take a look at the dollar itself. It's at running rate at 99.01 today. The dollar's staying strong because this is part of the fear trade. I mean, they want to get into, they want to be holding liquid assets right now. They want to be holding liquid dollar-denominated assets, but they're all surrounding the dollar. They see it as the only game in town, but all of its moorings have been dug away, you know, and it's ready to collapse. It's like that stone I talked about a few days ago, how it was ready to fall into the hole. You know, it's teetering. The dollar's teetering, but it's the best looking fiat currency. We've set up a situation here where all of the currencies, 1971 when Nixon took us off the gold standard, up until that point, the dollar had been connected to gold, and all of the currencies of Earth were connected to the dollar. So they all maintained their purchasing power in relationship to the dollar. The dollar was the standard, and the dollar was connected to gold, so the whole world was connected to gold because all of the other fiat currencies were connected to the dollar, and the dollar was connected to gold. Nixon went snipped that connection to gold, and when he did that, it was like a balloon, a giant balloon filled with helium, and a bunch of other balloons attached to it, and everything was grounded with a cord that went down to the ground that held the whole thing down. Nixon just came along with a pair of scissors and just went snip, and the whole thing started to float off into space, with nothing tethering it to the ground anymore. Nothing tethering it to reality anymore. So now we have it floating off into space, and now it's getting higher and higher up into the atmosphere, up into the stratosphere, and the balloons are inflating bigger and bigger and bigger. And you know what happens in the end? They all go pop, 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 pop. That's what happens in the end. You ever wonder what happens when you got one of these helium balloons and your kiddy's at the fair or whatever, you know, and he lets go of it and starts floating off up into the sky? What happens is that balloon gets bigger and bigger and bigger and bigger and bigger because the atmospheric pressure gets less and less and less and less until it bursts. That's what happens. And that's what's going to happen here. And we're getting awfully close. And see, Brexit could be the thing that tips us over that edge, that finally, the straw that breaks the camel's back. And so listen, thank you guys for listening. Give me a thumbs up. And we'll catch you guys in the next show. Bye-bye.